Hey folks, it's Simon here with your Tao Daily for Friday the 14th of March 2025. Another rough session for stocks on Thursday. The S&P here closing down at 1.33%, and it just continues to slice through support levels. And what's happened here with the S&P? We went from all-time highs just here to a 10% correction, which is slightly more than 10% in no time flat. And there's been no bounces, no retracements. It just went straight down the elevator shaft. And the fall that we've seen so far in 2025 is greater than the August Yen-Mageddon sell-off that we saw last year. So the S&P continues to slice through potential support levels, which is not a great sign, but it's falling on volume that's rolling off. All right, we didn't get a big spike on volume yesterday despite the weak activity. If we have a look at the Qs, the Nasdaq ETF, similar sort of dynamic, sliced through the support level. It's now potentially hanging in right where it needs to find some support, and again, volume is rolling lower. All right, it's just a sign that maybe sellers are getting exhausted, maybe sellers losing interest, maybe everybody who wanted to sell is kind of got to the point where they already have. If we look at the semiconductors, which can often be a leading indicator, this is showing tentative signs that it's found support kind of right where it needed to. We've got this big range of support here. We've actually had a pretty decent bounce in the semis. So maybe that is kind of foretelling fortunes to come for the broader tech sector. A couple of other things to pay attention to here. The VIX, we've had a number of closes above the upper Bollinger Band, a little bit of a double top here at a new cycle high, but the VIX is now moderating. And usually if the VIX moderates, the market is going to try to find its feet. The other thing to bear in mind is just the fact that sentiment here is really, really washed out. What we've got is the investors' intelligence bull-bear spread is below zero, or it's negative for the first time since November 2022, which was almost coincident with the 2022 bear market low. And the American Association of Independent Investors bull-bear spread is in the bottom percentile of all observations since 1988. So when sentiment gets washed out like that, and particularly when these two surveys agree, that is often where we'll get a market low, even if it's a short-term one. Now, given the amount of technical damage that's happened, my expectations are not massively bullish. I wouldn't be surprised if the S&Ps come up and just test this neckline here, which would bring us back into line with roughly the 21 EMA. That's probably all she's got in her for a rally, in my view, and that could present a good selling opportunity with the new downtrend if in fact these levels are rejected. That's what I got for you today. I hope it helps, and I'll catch you next week. Thank you.